Hello and welcome to Two Stocks Making the News. I'm joined by Mark Rogers, Champion Shares Pro Analyst Extraordinaire. Hey Mark.
Hey Chris.
Today we're going to look at two stocks that have recently released their Q3 results. First one we're going to look at is BP. Mark, how'd they get on?
Yeah, BP's Q3 results, fairly mixed bag. 26% drop in the underlying profits there, but the shares are up 5% on the news.
So they've dropped profits by quite a significant amount and shares are up. How does that work?
Well, the big news really was the emphasis on returning cash to shareholders in the results.
Okay.
The dividend was hiked by 6%. There's plans to dispose of another $10 billion worth of assets. The net debt situation is being slashed as well. So it's there was some weakness in the Russian business and the actual operating results, but the investors were really focused on those returns of cash to shareholders.
Absolutely. So as if you are a shareholder, good times?
Yeah, I think certainly in terms of extracting the value out of BP in recent years, getting that, I think investors are more interested in having that cash returned to them rather than investing in the oil projects at the moment. So I certainly think that they'll be pleased with today's news.
Excellent. Okay, and obviously, again, we'll look at a flip side one, and another company I say that released Q3 results was Lloyds Banking Group. Not such a great time for them?
Well, there was some mild profit-taking on the news. Q3 results, again, fairly mixed bag in terms of what you're actually getting. The big news there was the extra £750 million worth of being set aside for PPI claims there, which is a hefty amount. It brings the total amount up to £8 billion now in total being set aside for that. So fairly substantial. Pretty
substantial. And so is it all sort of doom? Is that really something to focus on if you're a shareholder?
Yeah, actually I don't think it was that bad. If you strip out the charges for things like PPI, Lloyds' actual underlying profits rose by 83%, back up towards about 1.5 billion now. So when you strip that out, you consider the cost cutting that's being done there, the restructuring. There was an improvement in the net interest margin, and so on an actual operating basis, Lloyds' situation was not
too shabby.
Not as bad as that.
Not as bad as it sounds.
Okay,
great. Well, thank you very much, Mark. There's a couple of shares for you to mull over there, and we'll be back next week with a couple more. Thanks very much for joining us.